हाय एवरीवन। सबसे पहले बहुत बहुत सॉरी आप सभी से, क्योंकि हम लेट हो गए हैं ड्यू टू सम टेक्निकल ग्लिचेस। तो इसके लिए आप लोगों ने इतना सारा वेट किया, उसके लिए बहुत बहुत धन्यवाद। और ये वेबिनार एक बहुत ही स्पेशल वेबिनार है जहां पर हम डिस्कस करने वाले हैं बहुत सारे टैक्स रिलेटेड इश्यूज, और एक नई चीज़ जो कोटक की तरफ से लॉन्च हुई है वो भी हम आपको बताएंगे। तो सबसे पहले बात कर लेते हैं कि ये वेबिनार आखिर क्यों लॉन्च किया गया है। इन दिस लाइव सेशन वी आर गोइंग टू एक्सप्लेन यू कि किस तरह से आप अपने टैक्स को अब इजीली हैसल फ्री पेपरलेस तरीके से फाइल कर सकते हैं, और कैसे आप अपने टैक्स फाइलिंग की पूरे ITR फाइलिंग की जो जर्नी है उसको चंद मिनटों में पूरा कर सकते हैं, ये बताएंगे। प्लस उसके अलावा जो टू ऑल द न्यू ट्रेडर्स एंड इन्वेस्टर्स जो अभी जिन्होंने अपने इन्वेस्टमेंट एंड ट्रेडिंग की शुरुआत की है, वो किस तरह से टैक्स फाइलिंग कर सकते हैं, कैपिटल गेन्स क्या होते हैं, किस तरह से आप इनको मैनेज कर सकते हैं, कैलकुलेट कर सकते हैं, ये सारी डिटेल्स हम आपको इस वेबिनार में बताने वाले हैं। और ये पूरा प्रोसेस समझाने के लिए और आपके क्वेरीज के बारे में, आपको क्वेरीज से रिलेटेड जो आंसर्स है वो बताने के लिए हमारे साथ एक खास गेस्ट भी बने हुए हैं। आई वुड लाइक टू इंट्रोड्यूस मेघा जैन, जो क्लियर टैक्स के साथ एसोसिएटेड है। मेघा को ऑलमोस्ट एक डेकेड का एक्सपीरियंस है इस फील्ड में, और वो हमारे साथ मिलकर आपको ये पूरा डेमो देंगी, समझाएंगी कि कैसे आप टैक्स फाइलिंग प्रोसेस को कर सकते हैं। एक Q&A सेशन भी होगा जिसके लिए आपको थोड़ा इंतजार करना पड़ेगा। इनमें आपके ज़्यादा से ज़्यादा क्वेश्चंस, वी वुड लाइक टू सजेस्ट यू कि आप अपने क्वेश्चंस के साथ रेडी रहें। तो Q&A के टाइम आपका जो टाइम है और क्वेरीज है वो ज़्यादा से ज़्यादा लिया जा सकेगा। So without wasting my time and your time, let's introduce Megha. Megha, thank you for joining in.
Hello everyone. Thank you so much, Indu.
Okay. तो मेघा, सबसे पहले हम ऑलरेडी काफी लेट हो चुके हैं, एक क्विक डेमो दे दें कि किस तरह से प्रोसेस होगा टैक्स फाइलिंग का।
Absolutely, yes, Indu. Please, let's do that. So before we begin the webinar, just a couple of things for all our users. First of all, apologies. We had like a little bit of a technical glitch. But now, without much further ado, we'll begin the session. So the agenda for today's session is to discuss how to file your taxes using cleartax platform, and also what are the offerings. And plus, as Indu rightly mentioned, even as Kotak is presenting a new offering to its users. All right. So how is it that if you are somebody who has opted for that offering, how can you integrate the Kotak files with respect to your capital gain transaction on the Clear platform and go ahead with a seamless filing process? We will be helping you with that today. So firstly, we will be going through the entire filing flow, and then I will take up your questions on the entire filing flow and any other questions pertaining to taxes that you may have. Anything under the sun relating to personal taxes and filing the return of the income for the current assessment year, which is assessment year 24-25, we will be taking that.
Okay. Thank you, Megha. Okay, I'm sharing the screen. Just give me a second.
Yes, Indu.
Yeah.
Excuse me.
So my screen is visible, Megha?
Yes, absolutely.
Okay, just give me a second. Okay, I think we are good to go now.
Absolutely, Indu. Yes. Okay. So yeah, as I mentioned earlier on today, the session for today is to understand the DIY filing walkthrough. So if you're an individual who wants to file their return of income before the 31st July deadline and you want to do it yourself, then at ClearTax, we have an option wherein, a customer can do a DIY filing. As the name suggests, it is do it yourself. Once you have collated all the documents, all you have to do is, in 3 simple steps, you upload all the documents. Our software will do the hard work for you. It will do all the heavy lifting, wherein all the computations will be done automatically by the software. All you have to do is at the end, take a look whether the calculations are right or not, and then proceed with the filing. So this is in 3 simple steps. Now let me take you through the nitty-gritties and the small items here and there. All right. So Indu, next slide, please. All right. So as I mentioned earlier, filing with cleartax is very, very simple. If you want to go ahead and do your filing with cleartax, please log into cleartax.in. Once you go to that web page, you will have two options. One, if you're a first time user, then I'd suggest you please go ahead and create an account. However, if you're a repeat customer, all you can do is log in or sign up with your existing Google account, which you have used to open the cleartax account. Next slide, please. Once that is done, the first step for filing a return of income is you go ahead and pre-fill your return of income. Or before that, here, as you can see, there is an option, click on start filing. Once you click on start filing after logging in, then you will be taken to a new screen. Next slide, please. So once you're on this screen, here is where the first and the most important step happens. Here is where you have to first go ahead and pre-fill and also link your PAN with cleartax. Now, why this step is important, linking your PAN? Because cleartax is a registered ERI of the government. So if you have to go ahead and file your return of income using the platform, then linking your PAN becomes mandatory. The next step is pre-fill. Now, what does pre-fill essentially mean? As the name suggests, it is something which pre-fills, that is filling up something. So pre-fill can be done by way of getting an OTP on your Aadhaar mobile number. Essentially, what pre-fill does is whatever is the data against your PAN, whether it is data pertaining to your income, this income could be income from salaries, income from capital gains, or income from other sources. And on the other hand, it will also pre-fill all the details of taxes deducted against your PAN. So basically, all your details of Form 26AS, whatever is logged with the IT department or whatever is already appearing on your income tax portal, everything gets auto-captured by way of pre-fill. And the advantage of this is not just the data relating to your income and taxes get occupied here, but also all the data that you have entered with respect to your own self on the IT portal. That is your name, your PAN, your date of birth, address, etc. Now you may be wondering, why is this important? This is important because every time a user files a return of income, along with the income details, it is also mandatory to fill in a few personal details. So pre-fill essentially captures all that data. However, if you're in two minds about pre-filling or because of a technical snag that we just faced today, you're not able to go ahead and pre-fill, then you always have an option to skip the pre-fill for the time being and do it at a later point in time. If you want to do the same, then you can click on skip and proceed. Next slide, please. I can't do that. Okay, so once you have done that, once you have either pre-filled the return of income or you choose to skip, then the first option is uploading Form 16. So here again, all you have to do is upload your Form 16. If you have shifted employment during the year or if there are multiple employments, then you can go ahead and upload multiple Form 16s. Once you have uploaded your Form 16, our software will automatically calculate all the numbers and then present the final taxable salary to you. In the meantime, if you have any questions at all with respect to your Form 16s or your salaried income, we have also put out a FAQ on the right-hand side. So you can always reach out to those FAQs and read those FAQs if you have any doubts. Next slide, please. Once you have filled in all the details once you have uploaded all the relevant Form 16s, then this is the page that opens up. In the first page, we have to fill in the personal details of the users, the basic personal details, which is the name of the user, email ID, address, etc. Now, as I mentioned earlier, if you have already done the pre-fill, all these details will be automatically captured as per the details which are already appearing on the IT portal of the user. However, if you have not done a pre-fill, you will have to enter all these data manually. Also, please remember, until the time you have linked your PAN or pre-filled your return, if you have not done the same, our software will keep reminding you to go ahead and do the pre-fill because it's a very important step. As you can see on the bottom right corner, we already have a pop-up wherein it informs the user or reminds the user to go ahead and do that pre-fill. Next slide, please. All right. So once you have done this, once you have filled in all the personal details, we move on to income details. If you have already uploaded Form 16 in step 1, you do not have to repeat that again. We go on to check other sources of income. That is income from capital gains, income from house property, income from business or profession, income from other sources. And also we have introduced a separate tab this year for income from cryptocurrencies, because again we are seeing a large number of our users also being invested in cryptos. So whichever is the section applicable to you, you go ahead and click on add details, and then the software will guide you to the next steps. Next slide, please. So first we talk about, entering details of your capital gains. So if you are a Kotak user who has opted for Kotak Neo or KST, and you are filing your return of income using the cleartax platform, again the steps are very simple. The first thing what you have to do is, from the list of brokers that we have, you have to go ahead and select Kotak Neo. Next slide, please. See, this is the page that opens up. Once you click on capital gains, we have a list of brokers partnered, whom we have partnered with, and Kotak Neo is one of them. So if you're a Kotak Neo user, please click on Kotak Neo, and once you click, you will have two options. Let us look what are those options. Next slide, please. Next slide. Yeah. So here is where once you're a Kotak user, you automatically have an option to log into your Kotak Neo account through the cleartax platform itself. Next slide, please. Sorry. Next slide. So here is where the previous slide, Indu. Yeah, here is where a user can directly log into their Kotak Neo account and import all the details. Alternatively, what a user can also do is go ahead and download the Kotak Neo tax P&L statement. A tax P&L statement is essentially your tax profit and loss statement, which will help you assess your capital gains from a tax perspective. So either a new user can go ahead and directly log into their Kotak Neo account from the cleartax platform and import all the details, or the user can go to their Neo platform and download an Excel file for the financial year 23-24, because that is the relevant financial year, and come on the cleartax portal and upload that file. Next slide, please. So once that step has happened, so here what the user has to do is he has to just go ahead and confirm whether he's a Kotak Neo user, and essentially these are the files he wants to download. Once that is done, you have to accept and continue. Next slide, please. Yeah. So if you want to, log into your Neo portal directly from the cleartax platform, then there are certain details you need to fill. Next slide, please. Once you have filled in those details, you will be logged in. Once you have logged in, then you can download the statement. Next slide, please. Yeah. So here, once you upload the Excel file, then this is how the parsing is done. All the data is automatically computed by our software. The user does not have to do anything. The user has to simply log in and import the details. All the calculations will be correctly done by our software. Next slide, please. And here is where, as I mentioned earlier, you also have an option of going ahead and uploading an Excel file. So here is where you can go ahead and upload the Excel file. Next slide, please. Once it is done, this is the page that will appear. You simply click on proceed. Next slide. Here is where again you will get an auto confirmation wherein you have to confirm your PAN details. Once you confirm your PAN details, next slide. All the data is parsed. The process is ready. Next slide. Yeah. So with this, all your capital gain income will get computed. Besides that, we also have an option if you have sold any other capital asset. For example, you have traded in bonds and sold bonds, or you have sold agricultural land, or if you have sold any residential house property or foreign equity that you're holding, then we have various other relevant tabs under the capital gain section. Whatever is the asset that you have sold, please select the appropriate tab, click on add details, and then fill in all the relevant details and proceed ahead. Next slide, please. So once you have filled in all the details, then you can also go ahead and proceed and enter your income from other sources. Now, please remember with respect to income from other sources like interest income, whether it is savings bank interest income or FD income or dividend, all these details automatically get pre-filled if the same is updated in your AIS and if the user has done a pre-fill. However, if the user has not done a pre-fill, then all of these details will have to be filled in manually. Next slide, please. Yeah. Once this is done, then we move on to entering details from income from house property. Now, with respect to income from house property, it depends on the kind of house property the user owns. If the user has a self-occupied property, then the user can go ahead and take benefit of the tax deduction available on housing loan, which is up to rupees 2 lakh per annum for a maximum of 2 house properties in the case of an individual. So if it is a self-occupied property, you click on the first option and add all the details. So here again, you will have to enter the full details of the house, that is the address of the house, who are the owners of the house, and the amount of interest that has been paid. So the software will automatically compute whether if there is any pre-construction period or if it is only the current year construction interest. Such data will again automatically be computed. On the other hand, if it is a rented out property, that is to say, if you own a property and you're receiving rental income, then you add all those details in the field income from rental property. So here is where first you will enter the house address, then you will also have to give in your rental details, that is what is the total amount of rent that you're receiving. Then if you have paid any municipal taxes for the current year with respect to the house that you have rented out, you will have to enter the details of those taxes because it is deductible. Then our software will automatically take in a standard deduction of 30% and the balance will be offered to tax. On the other hand, if you have taken a loan against such house property, which you have given on rent, you can also enter the loan details. And lastly, it is mandatory that you also provide your tenant details. Now, here is where I would like to reiterate one thing. If it is a self-occupied property, in that case, municipal taxes or any property tax paid will not be allowed as a deduction. However, if it is a rental property, in that case, whatever are the property taxes or municipal taxes that you have paid, that will be allowed as a deduction. Next slide, please. Next up, we also have a specific slide for crypto income. Now, crypto income is something that is, we are seeing a spike in the number of users who are using or who are trading in cryptocurrencies. That is why we have also partnered with a lot of crypto brokers. So if any of your crypto platform is enlisted here, all you have to do is download the crypto statement from your particular broker, or you also have an option to go ahead and log into that particular broker directly from the cleartax platform and import all the details. Now, few things that need to keep in mind with respect to crypto taxation is that, one, crypto and NFTs are taxed in a similar manner, wherein any gains that you have from your crypto will be taxed at a flat rate of 30% and an additional cess of 4%. Now, please remember this 30% rate of tax applies both for long-term gains or short-term gains arising from crypto. The second most important thing that a user needs to keep in mind with respect to their crypto income is that any losses that you have, that will not be allowed to set off against the crypto gain. All right, no losses are allowed as a set off. The entire amount of gain will have to be offered to tax. Secondly, no expenses also are allowed to be reduced from the crypto gains. Next slide, please. Indu, next slide, please. Yeah. So once that has happened, then we also go ahead and fill in all the tax saving details. So all the tax deductions. So whatever is the tax deduction that a user has in various sections, whether it is section ATC, ATD pertaining to medical insurance premium, or ATCCD2, which is your employer's contribution to NPS, etc. All those details are entered in the tax saving column. After that, lastly, we have the tax summary column. Now, this tax summary column captures a brief screenshot of all the incomes that you have and the taxes paid thereon, and the tax payable, if any. Now, this page also gives the user an option to go ahead and compare the regimes. As you can see, we have an option there, compare regimes. So there is where the computation will be prepared both under the old tax regime and the new tax regime. And our cleartax software automatically uses this regime which is most beneficial to the users. All right. However, if the user still wants to go ahead and compare the regimes, he can see the comparison there. You can also download the detailed statement of the computation that has been prepared. And at any point in time, if you have a question or if you have any doubts in your mind pertaining to the computation or pertaining to any tax matter or also the tax liability, if any, you always have an option to connect with one of our experts. So on each filing page, if you see, on the right hand side, you will always have an option to connect with our experts. If you're stuck somewhere or if you have any doubts or if you want a second opinion, all you have to do is connect with one of our experts, click on that option, and you will be connected to a tax expert who will help you. Next slide, please. So as you can see, once you know if you're satisfied with the summary, then you proceed to the next step. If you have not already done the pre-fill in step 1 or earlier steps, then you will first have to finish the link pan and pre-fill. Once you have done the link pan and pre-fill, then we move ahead. Next slide, please. So here is where a user will have to pay the clear tax filing fee. As you can see in the entire journey that we went through now, at no point in time did the user end up paying the filing fee first. We first want the customers to get the satisfaction that yes, the correct computation has been prepared, all the data has been passed smoothly, it was a smooth filing experience. Only then, at the last step, just before filing the return of income, a user will have to go ahead and pay the clear filing fee. Once the filing fee is paid, next slide, please. Yeah, a self-declaration has to be filled in. This self-declaration is for the purpose to mention that all the details that have been entered by the user are true and correct, and no details has been falsely given. So once the user goes ahead and completes this self-declaration, the filing page opens up. Next slide, please. Yeah, so the filing page opens up, and once the user clicks on file, automatically the return of income gets submitted. So once the return of income is submitted, you will get a pop-up opens wherein it is stated e-filing is successful. However, this is not where it ends. Here is the most important step. After filing, it is mandatory that a user goes ahead and e-verifies the return of income. Now, one may wonder, why is e-verification so important? E-verification is one of the most crucial steps in filing the return of income, and typically e-verification has to be done within 30 days of filing the return of income. However, we suggest that a user immediately does it because otherwise the chances of forgetting to e-verify the return become more. Now, the consequence of not e-verifying your return of income is, if you don't e-verify the return of income within 30 days from the day of filing, your return is invalidated, meaning it is as good as a return not being filed at all. And that is the reason it is very important a user goes ahead and e-verifies the return of income, which is a very simple step. If you want to e-verify your return, all you have to do is select the OTP option, and an OTP will be sent to your Aadhaar registered mobile number. Once you go ahead and put that OTP and click on submit, your e-verification will be done. Next slide, please. Once your e-verification is done, this is the pop-up that will appear wherein it will be clearly stated that e-verification is successful. So with this step, your entire filing for the assessment year 24-25 is complete. Next slide, please. Yeah. So thank you so much for being such a wonderful audience and staying with us during the course of this presentation. Now, if you have any doubts, we open the floor for Q&A, and you can go ahead and ask any questions that you may have.
Megha, meanwhile, can we just go through and inform our new traders and investors about the capital gain taxes?
Yes, please. Okay, so capital gain tax from an India perspective is very simple. Again, predominantly what we see is a lot of users invest in equities. So if you're a trader or a user who is investing in equities, then taxation of equity shares is dependent on the period of holding. So if you have invested in a share and if you have sold your investment within 1 year, then that will be regarded as short-term capital gains. And short-term capital gains are taxable at the rate of 15%. On the other hand, if you have gone ahead and held these equity shares for more than period of 12 months, and after holding them for a period of more than 12 months, you sell them, they will be regarded as long-term capital gains. And long-term capital gains are taxable at the rate of 10%. However, it is to be remembered that if it is a long-term capital gain, then up to rupees 1 lakh will be exempt. Only the gains over and above 1 lakh rupees in the case of a long-term capital asset will be taxable. Now, thank you, Indu. Thank you for sharing the slides. So here is where what is capital gain in a nutshell. So if you have sold any capital asset, all right, then the gains arising from such capital asset are known as capital gains. Now, capital gains, depending upon the period for which you have held the asset, can either be a long-term capital gain or a short-term capital gain. Now, the period of holding differs from each asset class. So let us take a look at the period of holding with respect to specific asset class. Next slide, please. So here is where we have put out a snapshot. So if your capital asset is a listed equity shares, so if it is a shares listed on the Indian Stock Exchange, that is the Bombay Stock Exchange, and if you're holding the share for more than period of 12 months, it becomes a long-term capital asset taxable at the rate of 10%. If you're holding it for a period of less than 12 months, it is taxable at the rate of 15% and categorized as short-term capital gain. On the other hand, if you have invested in a mutual fund, an equity-oriented mutual fund, again, the long-term capital asset is when the asset is held for a period of more than 12 months and it is taxable at the rate of 10%. Similarly, if you have held those equity-oriented mutual funds for a period of less than 12 months, it will be categorized as short-term capital asset taxable at the rate of 15%. Next, we talk about unlisted shares. Now, unlisted shares refers to the shares which have not been listed on the Indian Stock Exchange or shares of a foreign company. So, if you have invested in shares outside India on any other stock exchange, or if you have received ESOPs or RSUs of a foreign company, then all of this will be categorized as unlisted shares. The period of holding for unlisted shares for it to qualify as a long-term asset is more than 24 months. In that case, it will be chargeable to tax at the rate of 20%. If it is held for a period less than 24 months, it will be regarded as short-term capital gain and taxable on the basis of slab rate. So that is to say, whatever is the applicable slab rate, it will be taxed as that. Next, if you have sold any immovable asset, which is a land or a building, in that case, if you have held it for a period of more than 24 months or 2 years, it will be categorized as long-term capital asset taxable at the rate of 20%. On the other hand, if you have held such immovable asset for a period less than 24 months, it will be taxable on the basis of the applicable slab rate. Similarly, with jewelry, if you are holding jewelry for more than period of 36 months or 3 years, it will be regarded as long-term capital asset and chargeable to capital gains tax at the rate of 20%. If you're holding it for a period less than 36 months, it will be taxable on the basis of slab rates. Next slide, please. Now, this is how your capital gains is computed, wherein we first begin with the sale value. So whatever is the total sale consideration that you have received, that is entered in the amount column. Next, we reduce any transfer expenses. That is expenses that you must have incurred exclusively for the purpose of sale. So after we deduct the transfer expenses, we get net sale consideration. From that net sale consideration, we have to reduce cost of acquisition and cost of improvement. Now, for cost of acquisition, in certain cases, indexation benefit is available. In case of a land or any other immovable property or unlisted equity shares, indexation is available. Now, what does indexation mean? Indexation means getting the asset to the current fair market value. For example, you may have purchased a land, let us say in the year 1980, for a meager sum of rupees 1 lakh. However, the cost of that land will not be 1 lakh if you're selling it in the year 2024. So we adjust for inflation over the period 1980 to 2024. That is known as indexation. So we reduce the cost of acquisition or indexed cost of acquisition. We also go ahead and reduce the cost of improvement. And finally, whatever is the number that arrives, such number or such amount is known as your capital gains. Next slide, please. Now, what are the tax saving opportunities in terms of long term capital gains? Predominantly, the tax saving opportunities with respect to long term capital gains are available under Section 54, Section 54F, and Section 54 EC. Now, what each of these sections says, let us try to understand. In case of Section 54, if you have sold any long term capital asset, all right, and whatever are the gains, such gains have been reinvested in a house property, or if you have spent such gains on constructing a house property, in that case you will be getting a benefit. That is to say, whatever are the gains that you have made on such sales, that will be exempt. Similarly, if you have sold any long term asset, all right, and the sale proceeds of those long term assets, you have invested in a bond, a 54 EC bond, that is known as rural electrification bonds. In that case, up to rupees 50 lakhs will be exempt. That gain will not be offered to tax. Now, please remember, if you are investing in 54 EC bonds, that is rural electrification bonds, they come with a minimum lock-in period of 5 years. That is to say, you cannot go ahead and sell those bonds for a period of 5 years. If you go ahead and sell them in between those 5 years, then whatever was the gain which was exempt will be chargeable to tax. Next slide, please. Now, what are the amendments for the current assessment year? That is assessment year 24-25 with respect to taxation of capital gains. Let us take a look at them. First of all, from this year onwards, there is a separate carve out for sale of debt oriented mutual funds. All this while, mutual funds were taxed as mutual funds alone, but from this year onwards, it has been divided into two parts: sale of equity oriented mutual funds, which we have already discussed, and now coming to sale of debt oriented mutual funds. Now, if you have invested in any debt oriented mutual funds and you go ahead and decide to sell them, in that case, debt oriented mutual funds or market linked debentures, as per the current amendment, will always be regarded as short term capital gains, irrespective of the period of holding. So, whether you have held the debt oriented mutual funds for 3 years, 3 months, or even 3 weeks, they will always be regarded as short term capital gains, and they will be taxable on the basis of the slab rate mechanism. Next up, the maximum amount of exemption an individual can claim under Section 54 and 54F is available only up to a maximum limit of rupees 10 crores. Earlier, there was no such limit. However, from the current assessment year onwards, the exemption with respect to capital gains is restricted to 10 crore rupees. So, in case where an user is having high amount of capital gains, let us say 15 crores, in that case, the restriction or the deduction will be restricted to rupees 10 crores, and the balance 5 crores will have to be offered to tax. Next slide, please. Indu, next slide, please. All right, I think with the this we are at the end of the presentation now. Thank you so much for being a wonderful audience. We will now open the floor for Q&A. So, Indu, if you can please help me out with the questions from the chat box, we will answer
Yes.
those questions, and then we can also take up more questions.
Okay. So, Megha, thank you so much for this demo and this insightful session. The first question, I think this question has been asked by many viewers. They wanted to understand that, how to, let me just go through the question once.
Sure.
So how to adjust the last year losses? अगर आपको last year losses हुए हैं तो उसको किस तरह से adjust किया जाएगा while filing your returns?
Absolutely, yes. So if a user has losses in the previous year into, first we need to determine what kind of losses are they. Are they capital gain losses, or are they loss from house property or any other income? So if it is a loss, then if you have entered the details of the loss previously correctly, then in the current year, whatever is the gain that you're making, you can go ahead and adjust that loss. For example, if you had a short term capital loss in the previous year and in the current year you have short term capital gains, then the loss of the previous year will be adjusted against the gains of the current year. And after that, if there are still gains, that such gains will have to be offered to tax. Similarly, if there was loss from house property last year, that loss will be carried forward, and in the current year, it will be adjusted against the house property income. However, if there is a loss from the previous year and in the current year there is no such gain, then the loss will continue to be carried forward. Now, depending upon the loss which it is, if it is a house property loss or a capital gain loss, or a loss from owning and maintaining horses, etc., then depending upon the nature of loss, the loss can be carried forward either for a period of 4 years or 8 years.
Okay. There's a one more question. Ravi जी का question है ये कि which ITR should be filled for F&O session?
All right. Mr. Ravi, thank you so much for the question. Now, with respect to FNO, there are a couple of things I would first like to say. If a trader has FNO income, and if the turnover from such FNO activity is more than 2 crores and the profit is less than 6%, then it is mandatory that you go ahead and get your books of accounts audited. It is a mandatory requirement by the IT laws. However, if you don't fulfill this criteria, your turnover is less than 2 crores, in that case, tax audit is not required, and the ITR form which you will be filing is ITR 4.
Okay, there's a one interesting question. Okay, let me show you the question also. How to calculate demerger shares profit?
All right. So if you have to calculate demerger shares profit, I am presuming this question is coming from an individual who is working for a company where the demerger has happened. Typically, in such cases, what the law requires is the demerged company. All right, they will be giving you out all the details. All right, whatever is the value at which shares have been assigned, and whatever is the cost base that has to be taken. Typically, if you're an employee, then you must have received these shares either at a very minimal cost or free of cost. In that case, your cost base will be zero. However, if it is slightly more complicated and the user is not able to understand, in that case, I would advise the user that they connect with a tax expert or a chartered accountant, or they can also connect with us at ClearTax, and we will be more than happy to help them out.
Okay, this next question, Mansoor is asking, is 1 lakh rupees exemption applicable in short term gain?
Mansoor, sadly, no, this 1 lakh exemption that I just spoke of is applicable only to long-term shares. If you have any long-term gains from sale of equity shares, in that case, up to rupees 1 lakh is exempt. However, for short term, the entire amount is taxable at the rate of 15% plus cess.
Okay, there's a one more person, Karthik, who want to understand the tax implications of intraday trading in equity.
Yeah. Karthik, if you're undertaking intraday, then that will be regarded as speculative trading. So speculative income again is taxable at the flat rate of 30%, and the ITR that you will have to be filing is ITR 3. Once again, you will have to enter this income or whatever is your turnover from speculation activities. There's a specific schedule. All right, for speculative income, you have to enter all the details there, and then income, the speculative income that you are earning, will be chargeable at the flat rate of 30%.
Okay. एक क्वेश्चन है इंटरेस्टिंग मेगा ये भी कि डू वी गेट लॉन्ग टर्म कैपिटल ऑफ ₹1 lakh rebate in new tax regime?
I'm sorry, I did not follow the question, Indu.
Do we get long term capital of 1 lakh rupees rebate in new tax regime?
Absolutely, yes. Even under the new tax regime, if you have a long term capital gain from sale of equities, up to rupees 1 lakh will be exempt.
Okay. Okay. There's a person who is asking that he is not a working professional, बट उनको लॉस हुआ है अराउंड 2 लाख रुपीस का, ओके सॉरी, लॉस उनको 5 लाख रुपीस का एंड ही इज नॉट अ वर्किंग प्रोफेशन, सो उनको अब क्या करना चाहिए?
A very, very good question. Thank you so much to the user for bringing up this point, a very valid point. So a lot of times, what happens is users think, okay, मेरी तो कोई income ही नहीं है. I don't have any income. I have a loss. Why do I have to file the return of income? This is very
Yes.
wrong. It becomes all the more important if a user has negative income. For such user to go ahead and file the return of income, simple for the reason that, as I mentioned earlier, there are certain category of losses which you can carry forward for 4 or 8 years depending upon the kind of loss. However, you can carry forward a loss only if you have filed your return of income. So if you have a loss, then your return of income will be known as a loss return. You go ahead and lodge all your losses, and in the future years, if you have any gain, then whatever is the loss, first this loss will be adjusted against the gain, and then only the residual gain, if any, will be offered to tax. So essentially what happens is, if you file a loss return, you are doing two things for yourself. One, you're lodging the loss to offset it with future gains and the future outflow of tax. So it is very, very important for the user to go ahead and file the return of income.
Next question, Megha. When audit is required, is any specific audit requirement rule for cash stocks?
Is there any specific audit requirement rule for what?
Cash stocks.
Cash stocks. Now, I am not sure what the user means by cash stock. However, let me tell the audit requirements. So, if a user is trading in FNO, all right, in that case, if the turnover is more than 2 crore rupees, however, on the other hand, in such FNO activity, the income is less than 6% of the turnover, it is mandatory to get your books of accounts audited. On the other hand, if the FNO turnover is more than 10 crore rupees, it is compulsory that the user goes ahead and gets a tax audit done.
Okay. Girish is asking, do I need to do an audit if my FNO turnover above 10 CR?
Absolutely, yes, Girish. It is compulsory if your FNO turnover is more than 10 crores that you go ahead and get a tax audit done.
There are a lot of questions that keep coming. Let me just go through it. We can take two or three more questions, Megha. Can corporate company
Yes.
trade? I think the viewer is asking is what is the okay? What about 30% TDS on FNO?
I have not heard of any such TDS on FNO. No such TDS is done. You can, cross check with your broker if they are doing any TDS, because as per the law, there is no requirement of TDS on FNO activities. However, once you have done FNO activities, they have to be disclosed in the return of income, and then applicable taxes will be done. And the taxation, by the way, is on slab rate basis.
Okay, I think we should take two more questions. Let me just go through it.
Sure.
So there's a one viewer who want to understand the difference between new tax and old tax regime.
Absolutely. Thank you so much for the question. So, if again, this is a very vast thing. If I have to, explain in detail the new tax regime and the old tax regime, it will take a lot of time. But in a nutshell, if I have to tell, new tax regime, what it does is it has done away with most of the deductions. All right. So, under the new tax regime, the deductions and exemptions available are very, very little. However, there are certain deductions available from current year, that is assessment year 24-25 onwards. One is a standard deduction of rupees 50,000. Then employer's contribution to pension, which is available both under the old tax regime and the new tax regime. Now, what the new tax regime has done differently is the slab rates have become lesser. So, under the old tax regime, we only have 3 slabs. However, under the new tax regime, we have 5 to 6 slabs, starting with 5%. So, we have 5% taxes, then 10, 15, 20, and then 30. All right, this is with regard to the new regime. Now, coming to the old regime. Under the old regime, the user can go ahead and claim a lot of exemptions and deductions. For example, HRA, LTA, ATC, ATD, donations, etc. These are all available under the old tax regime. However, under the old tax regime, we only have 3 slab rates. We have slab rate of 5%, 20%, and 30%. Another difference is under the old tax regime, the surcharge rates are higher. The maximum amount of surcharge under the old tax regime goes up to 37%. However, under the new tax regime, it is capped at 25%.
ओके, वन मोर क्वेश्चन, व्हाट अबाउट एनआरआईज हु रिटर्न बैक और अभी वो इंडिया में बस चुके हैं? ये क्वेश्चन है मेरे हिसाब से कि जो एनआरआईज थे वो इंडिया वापस आए हैं, उनके बारे में, टैक्स के बारे में बताइए।
Yes. So if you are a person who is an NRI who has returned to India, first we will have to determine if you're a resident. Once you're a resident, then we will have to determine if you're a ordinarily resident or a not ordinarily resident. All right. Basis that the taxes will be decided. However, if you're an NRI who is a tax resident of India, the moment you're a tax resident of India, your global income has to be offered to tax here in India.
Okay, so I think we have taken many questions, and thank you so much, Megha, for sharing all the details and answering all the queries of our viewers. And we request all the viewers, आपके जो भी questions हैं जो इस वक्त अभी हम नहीं पूरा कर पाए हैं उनके जवाब देना, प्लीज आप उन सभी क्वेश्चंस को इन वीडियोस के कमेंट सेक्शन में ड्रॉप कर दीजिए. वी विल श्योरली गेट बैक टू यू. एंड थैंक यू सो मच फॉर जॉइनिंग दिस लाइव सेशन. हमें उम्मीद है कि टैक्स से रिलेटेड जितने भी आपके क्वेरीज होंगे, जितने भी आपके क्वेश्चंस हैं, हाउ टू फिल योर ITR एंड व्हाट अबाउट कैपिटल गेन्स, वो सभी पूरे क्लियर हो चुके होंगे. स्टिल if you have any doubts or queries, please drop your queries in the comment section. We will surely get back to you. Thank you. Thank you all.
Thank you, everyone. Thank you for joining in. Thanks, Sindhu.